What is next for the housing market? The housing market in the US has seen a lot of ups and downs since the housing bubble that occurred in the past. The market has been stabilizing for a few years now, but experts predict it might be going down again soon. So what caused this predicted drop? It's easy to say that a lack of affordability for low-income households is an important factor in driving prices lower. If people can't afford to buy homes because they don't have enough savings or good credit scores, then it makes sense that demand would drop and prices will follow suit. There is also evidence suggesting that a new supply might finally start catching up with the new demand, which means we should expect some relief from rising prices soon, but not necessarily anytime soon. So let's find out what's causing this drop and why is it happening now and what we can expect to see happen shortly. Number 1, lack of affordability. There is no denying that the price of housing is too high for many people. This means that the first-time buyers will not be able to afford the homes that they want, even if they are willing to make sacrifices like buying smaller houses or moving farther away from work. According to Redfin, about 40% of the homes on the market in 2018 had prices that were too high for first-time buyers. 2. Supply catching up with demand. It's not just a lack of affordability that will drive the prices down. There are also many other places where the housing supply is finally catching up with demand. For example, there are now twice as many as houses listed for sale in Denver compared to last year, which means that buyers have more options, but not much better chances at getting a good deal. It also means that the buyers are less likely to overpay for houses, which will put downward pressure on prices even if the demand does not drop. Number 3, rising mortgage rates. One of the most important factors that could move the housing market is rising interest rates, and there has been no shortage of those recently. Mortgage rates have risen by quite a few percentages in the recent years, and they're expected to continue doing so. This will make it more expensive for borrowers to get mortgages, which results in less demand for homes, especially if the wages aren't growing at the same price. Number 4, recent events. We can't forget about COVID. It caused thousands of job losses and a few $1 billion of debt. Since people lost their jobs, it's becoming impossible for people to buy houses, which means the demand for the home is dropping. All of these events have contributed to the significant drop in housing prices we have been seeing recently, and there is no reason to believe that it will stop anytime soon. Number 5, economic downturn. One of the biggest reasons why housing prices often drop is because of an economic downturn. This can happen when there are high levels of unemployment and demand for homes drops as a result. It's happening right now and it will continue happening until we see better job market conditions and more opportunities for people to work, which means we could expect housing prices to drop until 2022. Number 6, unemployment. As we mentioned above, people are losing their jobs and this has led to less demands for homes. People can't afford houses when they don't have a steady income. So it makes sense that cars are starting to drop because of unemployment. This could also explain why mortgage rates are not increasing as fast as they should be if the housing market really was that good. Number 4, recession. Another factor that can affect housing prices is recession, which many experts believe to be inevitable in 2021. So it's something we might have to look forward to at some point. According to the data from St. Louis Federal Reserve Bank, a recession will likely start in Q3 of 2021 or earlier if we look at historical trends. This would mean that the housing prices would continue dropping until 2022, and as long as it doesn't turn into a full-blown economic depression. So what does this mean for the market? The future is looking bleak for housing prices. After seeing such big drop in 2019 to 20, it makes sense that we can expect to see at least another one in 2022 and beyond. The unemployment rate will continue climbing, which means people won't be able to afford houses no matter how much they want them. The same goes for mortgage rates and recessions. They could be inevitable, and it would make sense if we keep seeing dropping prices until 2022. So what to expect for the near future? The housing market has been very unpredictable in the past few years, and that won't change in 2021. It's hard to say what will happen next because there are so many factors involved. The economy and unemployment rate have contributed a lot to housing prices in 2019, but experts can't predict what will happen the next year. There may be a recession that could trigger a drop in the housing prices very soon, or unemployment rate that could start going down if the economic conditions get better, which would mean housing prices may not drop again. Moreover, we can't forget about inflation. It has been increasing quite a bit over the past few years and shows no signs of stopping soon. This means we could see more houses available with prices going down at least another 5%. But there is no way of knowing for sure. That's why experts are still divided when it comes to what will happen in 2021. But one thing is for sure, the market is only going to become more unstable. It's safe to say that the market might stay unstable in 2021 and even in 2022, but it's hard to say what will cause another big drop in the housing prices. But some factors may contribute. Unemployment will continue being a problem until economic conditions improve significantly. There could also be a recession or an increase in inflation, which would all contribute to housing prices going down.